Hi there, welcome to Kneppy Invest and welcome to the 30th of May 2025. Time is currently 2:57 p.m. on a fairly cloudy, rainy day in Brisbane. Some light rain is currently falling and I do enjoy these sort of days. Okay day on the market, relatively speaking. There's still an hour and 12 minutes left of trading, so we might end up in the red. Now, one of the reasons I might be a little bit surprised we are up today, and I'm just focusing on the XJO and the All Ords, is because we did have some weak economic news released today. I'll talk about that in a second. And after I talk about that weak economic news, we'll go to the ASX today, and then we'll go through the top 5 stocks of the day. And it was a struggle finding 5 interesting announcements. So I did rely on you. And one of you did mention a company that I have included in the top 5 stocks that released something interesting yesterday. And I've also will have a look at the chart of the day. Completely forgot about that yesterday. So there is a chance I'll forget about that today because I don't usually do it. And I might put it down onto my to-do list. Chart of the day. There you go. Chart of the day. And funny enough, the chart of today, which was supposed to be the chart of the day yesterday, is also a company one of you mentioned. Yes, one of you did mention this company overnight, and lo and behold, it's the chart of the day today. Maybe our minds are linked. Maybe we're psychic. Anyway, now on to this week economic news we did see released today. Go to Trading Economics. In fact, we see it, not the Asian markets fall. So funny enough, we're up. Asian markets fall on tariff uncertainty. Now, I thought we might have fallen on the 2 bits of negative news. Australia building permits unexpectedly fall. That could be a negative sign about the Australian economy. I think it's the second month in a row. And Australia retail sales unexpectedly drop as well. They were supposed to rise, but they dropped. Not a big difference, but in terms of consumer spending or retail spending, it is a big. So felling or falling. Felling is not a word. Falling at 0.1% instead of rising 0.3%. I had a look at what one economist said, and yeah. So it's really interesting because they did expect it to rise because of a few different reasons. For instance, February rate cut. That's the first reason. Second reason is Queenslanders were supposed to spend a little bit more because ex-cyclone Alfred sort of suppressed our spending a few months ago. And also the double long weekend, Easter and Anzac Day, meant that more people were supposed to spend and travel. So there were some positive reasons why spending was supposed to rise in April, but that did not happen. So they mentioned here, this economist, despite these factors, retail sales pulled back and clearly showed that consumers remained very cautious about spending, especially on discretionary items. Overall, real retail spending per person has stagnated since the beginning of the year after improving throughout 2024. We are now roughly back to where we were 1 year ago. Australia building permits. Now, I actually did ChatGPT this. I just wanted to see what might be spat out. And I just asked, Australian building permits month on month dropped this month. What does this mean macroeconomically? Now, it used the wrong data. It was a little bit old. I'm not even sure this 8.8% month over month drop is real because I had a look here and it was not down 8.8% last month. It was down 7.1%. And then April down 5.7%. So a fairly big drop in Australian building permits over the last 2 months. Fair enough. I'm going against the grain there. Anyway, so what it says, or what ChatGPT says, is an indicator of economic slowdown, which sort of makes sense. Building permits are a leading indicator of future construction activity. A significant decline suggests that builders are anticipating a reduced demand, possibly due to economic uncertainty or tighter financial conditions. Impact on employment and GDP. The construction sector is a substantial contributor to Australia's GDP and employment. A sustained decrease in building activity could lead to job losses and dampen economic growth. Also talks about regional disparities. This happened last month and also this month. Potential policy responses. A significant downturn in building permits may prompt policymakers to consider stimulative measures such as interest rates adjustments or fiscal interventions. I'm not sure the Reserve Bank will really look at this sort of information. I'm not sure, but anyway, so we'll wait and see. So a couple of interesting macroeconomic news released today, and I thought that might lead to a bit of weakness in our market, but that is not the way it's happened. Or maybe it's suggesting that the market's just ignoring all these macroeconomic news and just continues to buy, and doesn't really care. So in a way, you could say the market is fairly positive. Sentiment is fairly positive right now. Okay, let's have a look at the ASX today. Now, I have gone through the top gainers and top losers, but have not gone through the best performing sectors and indices. So this will be a little bit surprise. In fact, XAO and XJO have had a pretty good day. They were negative for the first 2-3 hours, first 2 hours, and has gone positive. So pretty good day for the Australian market. Healthcare, best performing sector. This sort of makes sense. Because of Healthscope, and there was an announcement from one particular company, and this is actually, excuse me, I did not bring up water. This company is actually the stock of the day, and also noticed that another company within the healthcare sector is up big, and I think that company is up because of this particular news flow through Healthscope. In fact, I can sort of confirm that because I asked ChatGPT about this very question, which companies were or are affected by Healthscope's administration. And it gave me 2 companies, and both of these 2 companies are up fairly big today. However, one of these companies is up because of this announcement. The other company is up just because I think they might be buying some of Healthscope's assets. And if they are buying Healthscope's assets, I'm wondering if they're buying it on the cheap. Probably the best time to buy assets is when the other company's gone to administration. You could buy those assets on the cheap. Okay, so let's go back to the market today and the best performing sectors. Yeah, so healthcare, no surprise there. Utilities, financials, and stables have a pretty good day and a pretty negative day for energy and IT. So energy's had a really good run down today, and IT's had a pretty good run as well. In fact, if we have a look at the last week, yeah, IT and energy both been the best performing sectors in the past month. So no surprise, past week. So no surprise they're down today. And by the way, utilities, the worst performing sector in the past month, and things have shifted a little bit today. Gold's had a pretty good day. Banks, another good day. Don't know why. And ASX 20 up 0.18%. So I'm assuming that's because of the banks. And I'm wondering, CBA at a record high. Oh, close, record high almost a record high for CBA. Anyway, let's have a look at the best performing companies in the ASX 29, up, 11 down, which is probably meaning that the bigger companies on the ASX or in the ASX have had a pretty good day today. So let's actually list this by market cap. And yes, in fact, only BHP is down, which is not a surprise because mining's down. And sometimes you could actually, without even knowing anything, if you see a pretty bad day for mining, typically iron ore's had a bad day. If you see a really good day for mining, I would say assuming that iron ore's had a really good day is not a bad assumption. So no surprise, BHP's down, CSL's up, yeah, NAB's up, Westpac up, CBA is up, and ANZ up as well. Macquarie and Goodman Group down just a little bit. That's the other thing. Some of these companies are down just a little bit. Fortescue down 1.72% and Woodside down 1.12%. And looks like the best performing company in the ASX 20 is Brambles, which I'm still shocked. Brambles is, I did read this the other day, Brambles is the most popular company for international investors, most popular ASX 20 company by international investors. Yeah, Brambles. I was shocked to read that. It seems like international investors staying away from the banks, and understandably so. They are significantly overvalued. But Brambles, yeah, that was a bit of a shock when I read that. Okay, now on to the top 5 stocks of the day. Slim Pickens today. I'm pretty sure Slim Pickens might be a name of someone. I could just Google it. Slim Pickens. I'm doing it off screen just because I don't want to make a fool of myself in case. Slim Pickens. There is a guy called Slim Pickens. Might as well do it now because I'm not going to make a fool of myself. Slim Pickens is a guy, an actor. There it is, Slim Pickens. There you go. I'm just going to say, he died in 1983. Oh, he's in Blazing Saddles, Doctor Strangelove, Villainous Turn in One-Eyed Jacks with Marlon Brando. Oh, he's the one who was riding the nuclear bomb in Doctor Strangelove. No idea. There you go. So I've learned something today. And Offspring wrote a song called Slim Pickens Does the Right Thing and Rides the Bomb to Hell. Anyway, Slim Pickens of interesting announcements today. What I'll do is I'll go through the top 5 and then we'll go to the chart of the day. Let's do that. But coming in at number 5 is a fairly small company called dorsaVi. I have no idea what this company does. Looks like they might do healthcare equipment and services. Share price up 7.69%, very close to 1 cent. And I try to stay away from companies with the share price this low. But they did sign a 3-year deal with Mining Health Leader. Anyway, so I actually did not open this up. I just saw the share price was up and I saw their release announcement. So I just put this at number 5 because, again, Slim Pickens is not only an actor in Doctor Strangelove, it's also a saying. Oh, so they signed a 3-year deal with mining health leader Sano Health. Never heard of Sano Health. Supports major mining clients across Australia with workplace safety solutions. They have collaborated for 5 years on injury prevention. Okay. New agreement sees dorsaVi's ViSafe Premium to be used by 10 Sano consultants across remote mining sites. So this company, what do they do? Focus on developing innovative motion analysis device technologies for use in clinical applications, elite sports, and occupational health and safety. They believe their wearable sensor technology enables, for the first time, many aspects of detailed human movement and position to be accurately captured, quantified, and accessed outside a biomechanics lab in both real time and real situations. They're focusing on 2 major markets: workplace and clinical. Okay, now I'm just going to have a quick look at the most recent Appendix 4C. How much receipts, how much revenue does this company have? And we'll go straight to the cash flow report. Oh, it is a very small company. Only $214,000 receipts in the quarter, $941,000 for the year to date over 9 months. So this company gets about $100,000 receipts per month. So $25,000 receipts per week. It's not a lot. And the company is operating cash flow negative. I'll have a look later at, I've also noticed the V is capitalized and the rest of the letters are not. I just noticed that. Is that in the announcement as well? Oh, yeah, it's also, it's the name of the company. So dorsaVi, V is capitalized. Okay, the new agreement is for 3 years at 30,000 per annum. So 3 years at 30,000 per annum. How many weeks in a year? 52 weeks. So we're talking about $500 per week. Okay, not much. But I suppose it's more than 0. So let's have a look at the chart for dorsaVi. DVL is the ticker code. I mean, this is a sort of company that maybe in 5 years' time, they might hit an inflection point, might see growth in their services, the receipts, revenue, and maybe this is a company that could become a really nice buy. Now, currently, the current market cap of the company, what's happening here? Current market cap of the company, I'm assuming it's like $10 million, if that. Let's have a look. $10.24 million. Yeah, so it's not a big company. In fact, out of the 2,300 companies on the ASX, it is ranked at 1,763. So there are 600 companies on the ASX smaller than this company. Yes, I'm going to say that again. There are 600 companies on the ASX smaller than this company. There are some very small companies on the ASX. But if we go back to the chart, nothing much here doing. A bit of interest back. Gee, on the 2nd of July 2020, share price rose 276.92%, went to a high of 25.5 cents, but closed at 4.6 cents. There must be a really good story to that one. 2nd of July 2020. I'm going to have a look at this. I'm sorry, in real time. I'm sorry, but this is really interesting. What I might do, 2nd of July 2020. 2nd of July 2020. dorsaVi signs as strategic partner of QBE Australia. So this was about 5 years ago. And this is actually a really good reason why sometimes I'm not, I wouldn't say wary, when a small company partners with a much bigger company. It's usually the benefits, any benefits in the partnership are going to be towards the big company, not the small company. And this company has just not done anything over the last 5 years. So this partnership with QBE Australia really has done nothing. Really has done nothing. I'm just going to open this up and see. Pre-allocated 250,000 over initial 12-month period to enable the customers, both new and existing, to access dorsaVi's MySafe and MyViSafe technology and resulting data insights. Yeah, so there you go. 5 years ago. And the company's done nothing since then. So no interest in this company, but maybe, just put on your radar, just in case in the next 5 years, this company does something. Company coming in number 4, yes, as I said, I had to really search high and low. In fact, I'm going to go to here, is Catapult. Share price up 11.12%. Now, they released their results a week ago, Well, the market reaction to the results were really positive. So we are talking about the share price increasing 13.7% on that day, 8.4% the next day. So the share price of this company has gone from $4.30 to $5.80 on the release of their results. Now, a few of you did sell out of this company because the valuation was looking a little bit stretched. So why is the share price up 11% today? The company has not released any announcements. Yes, why indeed? But there is a reason. And that reason is, I can find it somewhere here. Oh, here, no, that's not it. Here it is. You've got a note at 1 p.m. So 2 hours ago, that the reason why Catapult share price is up at that point in time, 7.7%, is because Morgan Stanley upgraded the company. And I'm still always surprised that a company will rally when like a broker or anyone upgrades or downgrades the company. So in a client note, Morgan Stanley analysis expressed optimism about Catapult's growth. So projected to grow from 2.1 to 3.2 billion at a 5% CAGR through 2027. That's not Catapult, that's this particular market. They expect Catapult to outpace this with 16% annual revenue growth and increasing operating leverage, maintaining an overweight rating on the stock. And this little note just went through their results, which I don't have to do. So the reason why the share price of Catapult is up is because of an upgrade from Morgan Stanley. And sometimes I've told you that the reason why a profit upgrade or better than expected results are really powerful is because you get upgrades. This is exactly what you're going to see. Upgrades from brokers, and you can see the effect of upgrades. Doesn't always happen, but you do see it a lot. And exact same thing when a company underperforms or release a profit downgrade. You see the exact opposite. Instead of upgrades, you see downgrades. And that is why the share price of companies can go on runs either up or down on the release of those type of powerful announcements. So let's have a little chart of Catapult. And I'll have to be honest. I'll be honest with you, I was thinking of maybe taking a little bit of profits, not completely selling out, but just maybe taking some profits because I bought, and here's another really good lesson. So this is a really good lesson. So you can definitely see share price or the chart of Catapult turning around. So share price was in a downtrend back in 2022, so 2023. Share price definitely turned, sentiment shifted back in sort of the middle of 2023. So about 2 years ago when the share price was 80 cents. And I actually did trade this, but I got out because of becoming bored during this little period between November and March. So over a 4-month period, it became bored, which is terrible. Share price was going sideways. I sold out of my trade and I bought back in a few months later at a higher price. So don't be hesitant about admitting you made a mistake and sort of correcting that mistake, which I did with Catapult because I bought it at $1.79, which was higher than when I sold, and the share price has 345. I'm trying to think, tripled, 180, 360, 540. Yes, the share price has more than tripled since then. So I bought back in on the 31st of May. So we're talking about 1 year from tomorrow. I bought back in, and in 1 year, the share price has tripled. So don't ever be hesitant about correcting your mistakes. I actually know a lot of investors who refuse to do that. Oh, I sold out of that company. I can't buy back in. Why not? Why not? This is what can happen. In saying all that, I don't think I'd buy on this. Yes, I don't think I'd buy on this right now. Share price has almost doubled since the lows back in April. Okay, let's move on to a company coming in at number 3. We have Elsight. Nice little comment yesterday from who was it? Trader Hooper. Elsight was up over 9% today, completely missed it. On announcement about an additional defense supply agreement of more interest, Elsight expects the April-May contracts to move the company through to profitability and cash flow break even in calendar year 25. I bought Elsight on their last quarterly, which was looking like an inflection point, and they're describing 2025 as a transformational year. A couple of things that drew me into Elsight was that comment from Trader Hooper, but also I had a look at the chart, and the chart was like, ooh, interesting. Now, if you just have a look at the most recent Appendix 4C, you wouldn't get too excited just yet. Quarter 1 revenue saw 64% year over year. So revenue in the first quarter was only about $1 million, but up significantly from the previous corresponding period. So this company, something to do with drones. I did read this a while ago. Software for drones, something to do with drones. What they do, their flagship product, the Halo, uses AI-based multi-link bonding to provide the most robust connectivity for drones and other unmanned systems. By adding cellular communications aggregated with satellite and RF communications, the Halo is 99.99% reliable and cyber secured. They had a nice little graph here showing just how this company is seeing their revenue increasing, also their future confirmed order bookings. Anyway, so interesting quarter for Elsight. And then the company released this little, where was it? Here it is. Elsight expands European contract to $9.6 million US dollars. So European Defence OEM expands supply agreement for additional 5.35 million for a total of 9.63 million to be delivered in 2025. So this company should really see their revenue take off in the next year. You would think. Now, just because their revenue takes off doesn't necessarily mean the company will hit that inflection point, but it does look like the company is getting to that point. And they also did mention here, the April and May contracts are expected to move Elsight through to profitability and cash flow break even in this year, calendar year 2025. Okay, so things are moving in the right direction for Elsight. Now onto the chart, and this is what caught my eye, is just how much interest is gaining. There's a better word than gaining. How much interest is building up for Elsight? So if we have a look at the daily chart for this company, nothing much happening. There was a little bit of a bull period in September 2023. Share price went a little bit of a rally, 2-day rally. The volume wasn't massive then, but before that, nothing much happened. And then all of a sudden, we started to see, particularly over the last few days, by the way, really big volume coming through. So someone is getting excited out there. It could be a group of people getting excited, a group of investors, maybe a fund manager or two getting excited. It does really look like it was the 9th of April 2025 when the company, 9th of April 2025, when the company released Elsight expands defense sector with new order worth 7.1. So $7.10, because I didn't put the M there. So I'm just assuming that's $7.10. I'm not sure if I would get excited when I see announcements saying they got $7.10 worth of orders. I know that's supposed to be millions, but it seems like that was the announcement. And then they released their Appendix 4C 2 weeks later. And those two things have really maybe not the Appendix 4C, but that first announcement really has increased the awareness of this company. And over the last few days, we've seen a massive increase in volume. So just the chart looks interesting. Now, that increase in volume just could be momentum traders, could be breakout traders, that sort of thing, because the chart does look fantastic. Now, I would expect maybe sort of a pullback. At the best, maybe not the best, at the worst, a pretty big pullback, but best case scenario would be a consolidation period where the share price doesn't pull back all that much. And by the way, the market cap of this company is around about $120 million. 130.85 million, a little bit off, but that's probably after the rise today. So if it was $13 million, I'd be really excited. Okay, coming in at number 2, we have, actually, yeah, I'm going to change it. No, yeah, I'll change it. Coming in number 2, we have Findi. So I used to own Findi, the only company I've ever had some options in, and then I exercised those options back in January 2024 at 90 cents. And then I've completely sold out. And the main reason was the chart. I was just trading it and I decided to take my profits and have completely sold out of Findi. This was actually a few months ago. Company did release their results today. I wasn't really sure what to take away from these results. My initial thought was, now, by the way, yesterday's share price of Findi went up 9.3%. And when I saw the company release their results today, I thought, oh, did someone know the results were going to be really good? The share price would go off, but no, the complete opposite. I would say the results were a little bit underwhelming, which is probably right, with the share price down 8.5%. Now, one of the reasons why the share price also might be down 8.5% is because the share price went up 9.3% yesterday, and the share price is back down to where it was at the start of trading yesterday. So up the elevator and down the elevator. Anyway, so it could be just a little bit of noise as well. Anyway, so there was a nice little chart somewhere. I'm pretty sure maybe it was in the company's. I don't think it was a presentation, but we'll have a look at the presentation. Presentation was fairly, I wouldn't say bland, but it was just numbers like revenue. By the way, yeah, revenue was exceeded guidance. EBITDA was within guidance. Profit before tax, not sure why you just can't put profit after tax, but profit before tax, $6 million. Talking about key milestones, talking about the company itself, business overview, investment themes, strategic horizon, and then results. So everything's increasing, and I'd say that the company will increase the revenue, EBITDA, and profit over the next 5 years based off what they're doing. Operating cash flow positive, 27.5 million, up a little bit from last year, which was 26.7 million. They have a little bit of debt, so it's okay. Anyway, so I'm not sure what to read of this market reaction and the results. I'm just thinking there is a little bit of noise within it just because of what happened yesterday. So let's have a look chart for Findi. And one of the reasons Findi caught my eye yesterday was because the share price did increase, and I thought, ooh, this could be a good sign moving forward. But today is a little bit negative. Also, we've seen a little bit higher volume today than what we've seen over the last few months. So before, you can see why I was trading this. And beautiful breakout back in late 2023. Share price won a really good run up to a high of $8. And since then, yeah, it's not much of a chart. And I was just thinking maybe share price could be breaking out. But I was thinking the same thing back in February. Share price went up 10.9% on the 18th and then fell away. So that's Findi. Not much, yeah, the results, not much can be drawn from the results, but that's all I'm going to say. Findi. Coming in number 1, and the stock of the day is Healthco. Did I have the right one here? Yeah, it is. Healthco, Healthcare and Wellness REIT. So there again, Healthco, Healthcare and Wellness REIT. Share price up, what? 8.12%. When a REIT is up 8.12%, yeah, that's pretty good. Okay, Healthscope update. That's why the share price is up. Healthscope has gone into administration. And I was thinking that which companies are going to be affected by this? I knew there were 2, and this was one of them. The other one is HMC Capital. because they spun out Healthco, Healthcare and Wellness REIT. And I did not think about the other company that would be affected by this administration. That's Ramsay Health, but I think that's positive effect, whatever. Anyway, so what is it? Healthcare. Actually, I'll just go to ChatGPT because I did ask a question about this. I asked ChatGPT, ASX stocks affected by Healthscope administration, Healthco, Wellness and Wellness REIT number one, because this REIT owns 11 Healthscope's 37 hospital properties. Following Healthscope's rent defaults, the company, this REIT, issued breach notices and considered replacing Healthscope as a tenant. This uncertainty led Healthscope to withdraw its financial year 25 guidance, which is why the share price has been pulling back. And the other one was HMC Capital, and they also have Ramsay Healthcare, which I was not thinking about. And also had Sonic Healthcare and Helios. Anyway, so what's been happening with these rents? This is what this whole announcement is about and why the share price is up. So they have entered into a short-term partial rent deferral agreement with Healthscope and receivers. All outstanding rent arrears for March and April, and 85% of rent for May 2025 will be paid immediately. Healthco, HCW, and UHF landlords will receive 85% of the rent due for a period June to August 2025. The remaining 15% deferred rent for May to August is due in September 2025. So this is supports a continuity of essential services at each of 11 the private hospitals owned by the landlords. All right, so this is fairly positive for this company or this REIT, and hence the share price is up. But in saying all that, when we turn our attention to the chart, you notice share price has been in a bit of a funk, and I'm pretty sure a lot of this is because of Healthscope. And even though the share price has risen today, you can just see a bit of selling pressure. And it's understandable why they're selling pressure, because the share price has fallen a fair bit. And those who are underwater, seeing their opportunity to sell some shares in this REIT, because the share price has popped up. They don't care why. They might not even know why. They saw the share price up 10% and went, oh, I can sell my shares in this dog stock. And I'd say most of them probably think this is a dog stock because the share price has fallen since they bought. And I can say that with fair confidence because if you look at the share price of this particular REIT, it's been falling ever since it listed or spun out back in 2021. In fact, the share price has more than halved. There you go. So I'd say every single shareholder is underwater right now, apart from those who maybe bought today, maybe not even today, over the last few weeks. Anyone who's bought the last few weeks has loved today, but anyone else is seeing their opportunity to sell out. The other company I thought this might positively affect would be HMC Capital, but no, doesn't really care. Share price down. And the other one was Ramsay, and Ramsay, what is it again? RHC. Whoops. And Ramsay is up 4.9%. By the way, Ramsay chart got onto my radar the other day, and this is why. So Ramsay is my chart of the day. Sorry, Electro Optics. You can be the chart of the day maybe tomorrow. This is the chart of the day, Ramsay Healthcare. So why is this the chart of the day? Now, I've been seduced by this company in the past. In fact, I was seduced by Ramsay almost 1 year ago because it looked like the share price was breaking out. There was a nice little rise in share price on the release of the results, up 7.3%. I thought, oh, this looks like a potential breakout. Hopefully you can see why. But then it failed. And because it failed, it got out pretty quickly. And share price then moved into well-defined downtrend through the rest of the year. And now we're starting to see a little bit of positive sentiment into the share price. In fact, I like this chart better than what I saw back in March. This is a potential buy or potential trade for me, just based off what I'm looking here. I've also seen a moving average crossover. I would have preferred some higher volume coming through today. When they did release the results, there was a little bit of selling coming in. I understand that. And I think maybe a lot of the shareholders who wanted to get out have already gotten out. So this chart does look interesting. Ramsay Healthcare. And that is all I have for you today in the ASX Daily Rundown video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.